I mean, it's all roads lead to inflation is kind of my, they used to all lead to Rome. Now they all lead to inflation. And so, I see much higher prices in both of these assets, for quite some time until we address this issue. The debasement of money does to you. And the sad thing is that the working class, I mean, those people who have assets have been somewhat benefited by it. The working class, they don't have the capital to buy that house, or they don't necessarily have the credit to buy that house. And so, they suffer at the cost of that. So.
Hey guys, welcome to Everyday Finance. The world's banking system is clearly under a lot of stress. The amount of debt is growing quickly, inflation is staying high, and central banks are quietly changing their policies. For buyers, the question isn't whether or not the government will print more money. It's when and how much. At that point, only valuable things that aren't controlled by the government will be worth anything. Not many people understand this better than Larry Lepard, an experienced trader and supporter of sound money. He says that inflation isn't a passing trend in his new book, The Big Print. Instead, he says it will shape the next 10 years. He calls it the big print. It is the huge amount of new money that the government will print to keep the debt pyramid standing. Lepard recently talked about why he thinks both gold and Bitcoin are about to go through the roof. In the past, gold has been the first asset to react to signs of inflation. Bitcoin came later, but it went up much more. He thinks that by the end of 2025, gold will be worth $4,000 and Bitcoin will have gone over $140,000. Or even more if inflation rises faster than the government says it will. We'll talk about Lepard's most important warnings, his prediction for inflation, and why gold and Bitcoin could be the best safe havens in the years to come in today's breakdown.
And so, my bet, the book's bet, your bet as a Bitcoin holder, mine as a Bitcoin holder and a gold holder, is that they'll choose the inflationary route. And Besant just told us that. He came out and he said, look, yeah, we're cutting back expenditures, we're getting all this revenue from tariffs, but really the solution to this problem is growth. We're going to focus on growth. And that's okay. He's right. Productivity enhancements, AI growth, that's all good. And they're going to get some of that. But they're so deep in the hole that the amount of growth they need can only come with inflation.
Yep.
And
Yep.
So my belief, and I remember it because I was a teenager in those years, my belief is we're looking at a decade that's very similar to the 70s, where we have these recurring bouts of inflation. And maybe there'll be several times the Fed will try to tighten to tamp down inflation, but each round will be worse than the prior round. And so that's kind of what I think is coming. And that's why I think, the message of the book to people was we really, as individual adults trying to take care of our families, we need to take some of our savings and put them in things that are protected from inflation. And those are things which the government by definition cannot print. And there are really only 3 of those in the world that are monetarily based, and they are Bitcoin, gold, and silver. And silver probably less so because it's been pretty much demonetized. And then there's another one, real estate, but that's not really a monetary asset. It's a hard physical asset and has other uses. So, and then stocks to a degree, but stocks are they're a mixed bag because, they can issue more shares and the economy turns down. And by the way, right now the stock market's not very cheap. So that's kind of the big picture of my view of where we are right now. And I think what we're waiting for is just the next leg to start. And it's interesting that we're having this conversation now here on September 5th. Because it wasn't but a few days ago, gold was doing a very long bull flag below $3,500. And silver was doing kind of a consolidation of a little breakout at $35. It was in the 36, 37 area. And in the last 2 weeks, I think it's about 2 weeks is the time frame. And you go back and look, and gold just went through 3,500 with authority. We're now at 36. And more importantly, silver went from 36.7 to 41. And so to me, these are a warning sign that the next wave of inflation is about to begin. What I'm going to do now is share my screen, show the window that we were talking about before, which I think is very interesting. This was a chart prepared by my partner, David Foley. He's a very bright guy.
He sure is.
Yeah. And so what we're looking at here, Walker, is a chart that shows from early 2018 to the present, maybe a week old, the price of Bitcoin in orange appropriately,
Naturally.
and the price of gold in gold. And the scales are different because in this time frame, gold went up 200% and Bitcoin went up 2,000%. So you can't really compare the amount of the move. Bitcoin, as we know, is superior to gold in price performance and has been for a long time, and I think will continue to be. And for aggressive investors, it is clearly the best choice. The only trade-off is it's a little more volatile than gold. Not a little more; it's a lot more volatile than gold. But here's what I find interesting about this chart is that there are several instances in history where gold has smelled the oncoming inflation and moved first. And probably the most notable one is early 2019 when Powell pivoted and that kind of it just became clear that financial conditions were getting tight and they were going to have to loosen. And gold smelled it. You know, gold on the right-hand scale was, you know, about 1,000. It scored it up to 1365, you know, or higher. You know, before it went up to 2,000 roughly in, you know, in COVID. But notice that nice move in gold and Bitcoin. Meanwhile, Bitcoin's just kind of going sideways, not really going anywhere. And then at some point, the Bitcoin, you know, market woke up and was like, hang on a second. There's been a lot of debasement here. We had COVID, we printed all this money, blah, blah, blah. And it took off like a rocket sled. And, you know, notably, you know, I mean, as I say, gold went up 30, 40%. Well, Bitcoin, as you and I both recall, because we were there, you know, Bitcoin's went from 10,000 to 50,000, like quickly, you know.
Yeah.
So it vastly outperformed gold, you know. And then, of course, the gold smelled the tightening, started to come down. Bitcoin followed and came down even more, you know, and that was Sam Bankman-Fried. And then, of course, another run, you know, okay, maybe we do have more inflation, but no, we don't, came back in. Then they both went down when Powell started tightening in 2022. And Bitcoin went down more than gold. Again, it's more volatile. But then gold, you know, and in this particular case, you know, gold again started to smell it. The Bitcoin's going down right here, and gold is going up. What's that all about, right? But eventually Bitcoin got the memo, started to go up, you know, and then gold came down. Bitcoin didn't come down as much. And then, of course, then gold really started to go up in 2023, took out 2,000, you know, in 2024, 2,500. And of course, Bitcoin, you know, came off of the bottom and just has rocketed up to 100, right? You know, and actually even higher. And in each case, though, again, gold moving higher here, Bitcoin still going down, but then comes back. You know, gold moving higher, Bitcoin coming down, but then comes back. And so here we are, and this isn't fully up to date because gold's now over the 3,500 number. It's into the 36 area, right? So it'd be off the chart, not by a lot, but Bitcoin's still languishing around at, you know, what is it, 109 today or something? So
a boring 109,000 US dollars, you know, just a boring number. Yeah.
You're feeling fine about it, but
yeah.
You know, if you bought it right at the peak at 123, maybe you'll think, oh,
Sure.
You know, heck, this sucks. But, you know, I find it interesting because I watch on Twitter and everybody's down on MicroStrategy and down on Bitcoin. How come it's not moving yet? And I'm just kind of like, guys, we've seen this pattern. This is old stuff. You know, just give it 30 to 60 to 90 days. And you know, people always ask me, what are your predictions? I think by the end of calendar, you know, 2025, gold will probably be at 4,000 and Bitcoin will probably be at 140, you know, maybe 150. So, you know, and we'll be kind of on to the next run. And I say that just because I don't think they can keep this thing going without, you know, more programs that obviously indicate printing. And the programs are subtle. You know, they, you know, this shadow QE through twist of buying bonds, and I'm pretty sure they're into the banks and telling the banks to buy the bonds and maybe giving them swap lines at low rates that they're not telling us about. I mean, you know, they're doing all kinds of things. They're pretty good at camouflaging what's really going on. But what is really going on, I mean, as you pointed out, you had a chart up earlier, it's a nice chart of M2, is that M2 is growing again. And we know, you know, and particularly global M2, China has really aggressively been growing their money supply because they had a big real estate downturn. So,
yeah.
You know, we can, I mean, it's all roads lead to inflation is kind of my, you know, they used to all lead to Rome. Now they all lead to inflation. And so, you know, I see much higher prices in both of these assets, you know, for quite some time until we address this issue.
Larry Lepard doesn't hold back when he talks about the U.S. system. It's designed to spend forever, no matter what. Politicians buy votes, protect holy programs, and hold on to power, so there is no room for anyone to be honest about their debt. Stein's rule serves as a reminder that things that can't go on forever will end. In the United States, the endgame is not a neat answer, but waves of inflation that keep happening. His advice is clear: Families should keep their savings in things that the government can't print, like Bitcoin, gold, silver, and even some real estate. The charts then show what really happened. Gold was the first thing to move, and it now has a value above $3,500. Bitcoin, on the other hand, is down near $115,000. Lepard thinks the same cycle will happen again. Gold will lead. But Bitcoin will eventually go through the roof once markets realize how much money has been devalued. He thinks that Bitcoin's next soaring run is ready to happen now that the world's money supply is going up.
Happy that we're in this condition, and I think it's a great country with a lot of positive attributes, but
Amen.
I also think that we can't ignore symptoms and problems that have been building for years and that need to be addressed if we want to get back to our core values and the promise that the founding documents of the country created. I mean, it was meant to be, a fair system where everyone had a fair shake, a fair chance, and not socialism, not the same outcomes. Everyone knew that those who worked harder would do better. That was all fine. That's part of the system. But the notion of the founding of the country was that, let's create a fair deal for everybody so that everyone has an equal opportunity to succeed. And that's always been the American story, the American dream. And sadly, what happened, the book describes it, is the monetary system got more and more corrupted. That's really been taken away from a lot of people. The young people can't buy houses. Wall Street can borrow with the Fed funds rate. Everyone else has to pay the credit card companies 25%. It's just, there's just unfairness everywhere. And, it's going to take some reform to fix that. And I'm counting on your generation to fix it and get it right, because I don't want my kids and grandkids to grow up in a dystopia. I grew up, and the 70s wasn't perfect. The Vietnam War was a really divisive issue. And there were some nasty things happening in the 70s. But I can say, from having lived in the 70s and living today, it was a kinder, gentler country in the 70s. There was much more of a middle class. It wasn't haves and have-nots. Everyone kind of just got along and got by. There wasn't all the social strife that we see today. The vitriol that's out there today is just unbelievable. It's really, and it's sad. And I get it. When you take people's lives and their jobs and their well-being, and they can't afford to feed their family, and they're working 3 jobs, they get mad, they get angry, they get frustrated. And I also get it that this is kind of it's a sophisticated fraud that the people at the top and the government have pulled on all of us. And that's a large part of why I wrote the book. I wanted to point out that it really is a fraud, and they've gaslit us about it. And I wanted to just call them on the carpet and say, no, you guys this is bullshit. This is absolute bullshit. And because I think that if we got enough Americans, my dream would be we'd get enough Americans to read this book, understand this stuff, and we'd get a real movement going in this country to return to sound money. The kind of thing that Robert Kennedy spoke about in Nashville in 2024. That speech was very uplifting. We can do it. We can fix this place, Apollo can grow up in a great country, and he will. But between here and there, we gotta fix it, and that may not be easy. Let's not kid ourselves. Let's not kind of sugarcoat it. You can't go through a fourth turning without some eggs getting broken. People like my book, but I think it's good for boomers. I've heard it's really landed with a lot of boomers because I'm a boomer and I'm writing from that voice, and so they kind of get it. But yeah, you have to have it kind of peeled away and shown to you. You also have to have a need and an understanding of it all. I would say, sadly, among some of my friends or acquaintances, they've actually been huge beneficiaries of the system. Do you know what I mean? And to them, there's nothing wrong with it. And they know their kids can't afford houses, but they figure, oh, fuck, I'm rich, I'll buy my kid a house.
Yeah.
It's like I love the meme that shows the guy holding the kid with the basketball up to the basketball net. And the caption is the kid saying, me thinking I'm good at basketball, and the person holding him up, or me thinking I'm good at real estate investing, and the person holding him up is inflation. Do you know what I mean? And any boomer who bought real assets during their lifetime, houses and stuff, has gotten just an incredible ride on the inflation. My parents paid 40, 35, maybe 30, high 30s, low 40s for a house in Ann Arbor, Michigan in 1966. One of the nicest houses in town. It's a very, not that that's a big deal, I'm not bragging. It was just a damn nice house.
Yeah.
And today that house is worth, a couple $1 million. It's nuts, right? So they don't own it anymore. They sold it. But the point is that, that's kind of what the debasement of money does to you. And And the sad thing is that the working class, I mean, those people who have assets have been somewhat benefited by it. The working class, they don't have the capital to buy that house, or they don't necessarily have the credit to buy that house. And so, they suffer at the cost of that. So
There is no place for this to happen in silence. There are many clues that central banks and states are leaving for people who are paying attention. As they said, the Fed just cut rates by 25 basis points, which means that the tightening cycle is over. The Treasury talks a lot about growth, but Lepard says that the numbers don't add up without inflation. Central banks in other countries are also quietly growing their balance sheets. The smart money knows about it. A lot of Bitcoin ETFs are being bought by hedge funds. Funds are putting less money into bonds. Billionaires are moving their money from stocks to hard assets. They aren't betting on a calm decade. They know that the big print Lepard worries about will happen. Another huge wave of money creation. When it happens, money will rush to assets that are in short supply. Gold and silver will do well. But Bitcoin is likely to do the best because it has a fixed quantity and is becoming more popular quickly. So, Lepard tells buyers not to be scared by the fact that Bitcoin prices are staying the same. Now is the calm before the storm. If he's right, the next 10 years could see one of the biggest transfers of wealth since the beginning of the tech boom. This will separate people who understand good money from those who don't.